We've been talking for a while about this disconnect between the stock market and the economy. The economy appears sluggish to outright stalled, while the market is rocketing higher. Why? Can this last? It doesn't matter. Asset manager Jonathan Satovsky is here to talk about this and other market issues. Jonathan, first, you were just back from the Berkshire Hathaway shareholder meeting in Omaha, Nebraska, a rather exclusive event. What is the Oracle of Omaha, Warren Buffett, saying about where we stand with the markets right now?
Buffett, Munger, and 35,000 of their closest friends in attendance. Essentially, they've maintained a very disciplined approach for 50 years, which has been extraordinarily successful, of buying businesses and looking at shares of businesses and somewhat ignoring the politics, ignoring the economy, ignoring the day-to-day movements of the markets. And that's been enormously successful for Buffett and many of their followers. And in thinking for how this relates to the individual investor and the disconnect you're describing from the general economy and the markets, is there's always this behavioral conundrum for people. Mm-hmm. Typically, when the economy is bad, the markets are doing well. And when the economy is very good, it's actually a time to be a little bit more fearful to invest in the markets.
And so let's talk about that and why investors, you think, should be a little cautious right now. So we've had an economy that is sluggish. We've had this market now setting new highs, and people are saying, what is going on here? This does not look all that good. And when you look at the numbers, for example, the earnings, companies are not growing revenue, they're cutting costs. So is this a trap for potential investors?
Well, we have you just pointed out a very interesting distinction. The profit margins are 70% above historical norms. So if you believe that profit margins are so high abnormally because unemployment is low, if unemployment picks up, then the stock market is very vulnerable to a decline in the future.
And why is that?
Because most of the earnings in this past quarter have beat profit expectations predominantly because of cost cutting, not because of the rise in end demand.
We're also seeing this really rough geopolitical environment right now with Syria, with Iran. And again, the markets here in the U.S., not the same for the world markets necessarily, are just kind of shrugging this off like, the good times are here to stay.
Well, it's really this concept of financial repression is something the vast majority of people don't understand. But for a retiree that has a certain amount of money, $2 million, $1 million, $500,000, and needs to support their lifestyle on that money, if they're getting 0% in the bank and 1.7% in a 10-year treasury, they're going to spend down their money fairly quickly. So the Federal Reserve is essentially pushing people out on the risk curve and forcing them to take more and more exposure to equities and stocks and
because
things.
They have no other way to put their money.
They just see, well, this is going up. Okay, I'll take part in this.
So and the risk here is when interest rates start coming up, eventually they have to.
Well, if you look at the Japanese environment, the Japanese have been caught in this environment for 25 years where their 10-year treasury equivalent is 0.5%, and ours is 1.7%. So part of the reason the Federal Reserve has been inducing such unusual policies is trying to avoid our own country 20 years from now being in the same circumstances. So the primary goal is to get us to this escape velocity where people actually embrace risk-taking, where people embrace Buffett's philosophy of investing for the long term, reinvesting back in businesses, investing for thinking beyond the next 3-6 months or even 6 quarters, but thinking over the next 10 or 20 years. And if we can embrace that risk tolerance and risk-taking and incent people to be more entrepreneurial, then we can get out of this in a very healthy way, and it's going to surprise people if they're thinking beyond, again, the next 12 months.
So let's talk about the incentivizing of people and entrepreneurship. There is, if you talk to small businesses right now, a lot of headwinds holding them back from investing, and that means from hiring. We got the jobs report out, and we talked about this earlier on the show. The jobs creation is really in the low-wage sector, not really substantial just yet. What are you hearing from small businesses? What do they need to be able to hire and invest?
Well, generally, small businesses would hire and invest if they had confidence that the future, the next several quarters, was going to be able to support that cost. Very simply, if you're going to lay out a $100,000 salary, you want to know that you're going to earn $100,000 to cover that. Otherwise, that's going to be less money for the business owner to take home. And in an economy where there's a lot of uncertainty, they may be a little bit more apprehensive of taking on and absorbing that new salary unless they had much greater confidence and clarity about what government policy was with fiscal policy and the conditions around their tax rates, so they can have much greater appetite themselves and confidence to be able to take on extra incremental hires, figuring the next 5 years is going to be great, no problem.
Okay, just one quick question to make this as quick as possible, what are you telling your clients? Should they be in equities right now?
Well, absolutely. I mean, people have no choice. So if you're a long-term investor, you have no choice but to invest. And there's a lot of great businesses that are growing. But what people forget is because they're so short-term obsessed with the day-to-day, month-to-month, quarter-to-quarter numbers, people are reacting to a number. Mm-hmm. They don't think about the idea of being a business owner. And if you're a business owner, businesses go through ups and downs and cyclical climates. And at the end of the day, in order to match their appetite not only for risk, but their ability to achieve their goals, people have very few choices but to look for good opportunities in business ownership.
Okay, Jonathan, thank you so much.
Thank
Jonathan
you for having
Satovsky. You're watching Arise America. Let's go back now to Debbie and Christina.
You said it so well. You are watching Arise America.